So market trends, what's happening in the market? What's going on with real estate? That's the most common question I get is what's going on with the market and what direction is it taking? So this is my most popular chart that I use whenever I meet with someone. I like to always refer to this. And this chart depicts the average home price on the Toronto Real Estate Board since about 2016, 2017. And believe it or not, the Toronto Real Estate Board is the one of the largest, if not the largest, Toronto board in all of North America. So our story starts about 5 years ago. In 2017, we saw prices go up 20, 30% in a matter of a few months. And that was with bidding wars and a very competitive market. And it was so alarming that the government in April of 2017, so 5 years ago, the Liberal government of Ontario announced something called the Fair Housing Plan, which included provisions such as a foreign buyer tax and all sorts of other rules in order to kind of curb the demand. And sure enough, it worked. You can see that the prices went down just as fast as they went up. But it was fairly short-lived. You'll see that now that the market started to rebound, and this big green oval here to the right, this is what I call the COVID-19 era of real estate. So it's hard to believe that the pandemic is already 2 years old, but when it first started, we had our first lockdown in March of 2020, you'll see this dip here. And that dip was basically when we had 50% of our buyers move themselves out of the market, because that was when we first locked down. People didn't know what to do. So when people don't know what to do, the fear sets in and they remove themselves from the market. And we saw that our prices actually took a dip, 5-10%. But you know what? It was short-lived. Again, within about 6 to 8 weeks, we started to see the rebound. And you can see that correction there, and the increase. And then you see this, whoop, all of a sudden a big increase here right after December. And sure enough, this past few months. So you can see this trend has just been increasing at an alarming rate, so much that we've far surpassed what happened in 2017. It took about 3 to 4 years to recover, but we are well beyond that. So it's been interesting to see, to say the least, what the developments have been in the real estate markets. So this chart here, or this slide, I should say, compares February of 2022 with February of 2021. March numbers are not in yet, but I think they're going to be fairly similar. You'll see over here to the right, sales. So collectively, the number of sales fell by around 17%. So what sales means, the number of transactions, the number of buyers that are out there actually went down by 17%. Now you'll probably say to yourself, well, that's pretty good, actually. It's less competition. But you'll see less listings out there, 20% fewer listings. So even though demand is slightly down, the supply is far less. And in the last year, we've seen a whopping 27% increase in prices. Just incredible. Since the pandemic started, we've seen prices go up roughly about 40% in the GTA. And I'll say that again, 40%. It's just nuts. However, we are starting to see some changes in the market, to say the least. So from a realtor perspective, we see the transactions happen. And back in, I would say, January, we would have listings that would have upwards of 40 offers and obviously quite competitive and selling at an alarming rate. I'm sure if you can read the newspapers, you'll hear a lot of stories. But we're starting to see things kind of level off, in the sense that now we're starting to see kind of plateau or flatten. Not to say that the prices have come down, but just that I'd say the competition is starting to feel more balanced. So, question, I guess, are bidding wars still happening? So let's kind of go through some examples here. This is a Mississauga condo that I helped someone purchase, and this just happened the last month. You'll see here that it was listed at $599. It had 4 offers, not 40, but 4, so fairly modest, and sold for $671,000. So what we are starting to see is that there are fewer offers per property. Here's another example. This is actually one of our listings here, again in Mississauga, townhouse. This happened just 2 nights ago. It had 2 offers listed for $799. It sold for $1,025,000. So again, I'll repeat that: 2 offers sold for $1,025,000. So $200,000 over the asking price. So even though there's less competition, we're still seeing that it can still be competitive. This is one actually that I was helping a buyer purchase. We were in the middle of 21 offers. Unfortunately, we did not get it. But you'll see this vacant plot of land, about 100 acres here, listed at $851, sold for $1,820,000. I mean, $1 million over the asking price. Just something else. However, that's not always the case. We are seeing that sometimes bidding wars don't work out. So in this case, this is actually a Mississauga semi-detached home. It was originally listed for $999,000, and it did have 2 offers on it, but it didn't end up selling. So it didn't meet the seller's expectations. The seller said, "You know what? I'm going to now just ask for what I'm looking for." And in this case, it's $1,379,000. And you can see it's quite beautiful from the photo here. And believe it or not, this is still on the market today. So if this is of interest for you, it is still available. We can talk about it. Now, with respect to the market, we're starting to see a lot of noise, right? It's not just about the market, but it's also this idea of inflation. And this has been a huge headline about the surging inflation that's been happening across Canada. Recently reported at 5.7%. It's the highest it's been in over 30 years. And quite honestly, it's rising. And I think it's understated, if anything. The way they measure it, it's kind of convoluted, but I'm sure if you anecdotally noticed that gas is quite a lot higher. Perhaps when you're going to the grocery store, you've noticed that if you're especially eating meats and so on, it's quite expensive. And what I find really interesting is that something like a car, a depreciating asset, a used car, is actually worth more than it was a year ago. You know, you're always told that, oh, you know, cars are basically depreciating and lose value with time. Well, not in this case. They're actually worth more than they were a year ago. So interesting developments there. And because of that rising inflation, we're starting to see pressure on interest rates. So everyone's really concerned about, rates and where they're going. So they are definitely trending upwards and curb inflation. However, they still remain fairly low. This chart here is the Bank of Canada overnight rate. You can see there since 1940. It peaked in the 1980s. And you'll see, like, relatively speaking, rates are still really low. Even with the quarter-point increase that happened at the beginning of March, rates still remain relatively low. There have been a lot of articles written that there's going to be 6 increases or so. Quite frankly, I don't think that's possible, just because the government themselves, they have a lot of debt. They can't afford it. So there will be increases, I feel that, but I don't think it's as much as perhaps the newspapers are suggesting. So predictions. For those, I get a lot of questions about, should I wait, Tom? Is it going to, is it going to implode somehow and I can wait for the dip? What I'm thinking, for this year at least, what we're seeing is that we expect the prices and the volume to kind of stabilize. So you'll see here that, it's kind of been increasing. That was a chart from earlier, but this is going to be leveling off, what we feel. So we're going to see some more stability and a more balanced market. Okay. Now, what I typically tell buyers is you got to look at real estate like a long-term game. So you're not speculating with this, generally speaking. You're looking at the long run. And in the long run, I fundamentally believe that prices will be worth more in 5 and 10 years from now. So no matter what you pay today, in 5, 10 years from now, it will be worth more. And the reason being is our fundamentals are still remain intact. So, for example, with respect to demand, we're expecting a lot of immigrants coming to this country, over 400,000 per year. They need a place to stay. They need a place to live. And we're not building enough homes for them. There have been a lot of talk from the government to kind of increase supply of homes, eliminate some of the red tape that's involved. But again, even with that, they aren't building enough homes. So try not to worry about so much the short run, because you'll see even in this chart, it goes up and down, but the general direction is that it's going up. So in 5 or 10 years from now, it should be up. So here's a great example. It's like if you bought in 2017 at this peak, well, guess what? You're still better off today, even despite the correction that happened in 2017. So keep that in mind as you're thinking about your purchase.